Welcome back. You're watching Stockwatch with me, Simon Brown. Joining me to take your stock-related questions tonight, David Shapiro from Sasfin Securities, Rowan Williams from Nitrogen Fund Managers. Please be sure to send your questions. Email stockwatch@bdtv.co.za or SMS to 41392 or on X using hashtag StockWatch. Gentlemen, thanks for the time. So the big story is that Boxer comes to market tomorrow. Question came through, what's the code? BOX, nice and simple. David, it got filled at 54, no surprise. By all accounts, massively oversubscribed. So assuming you got low allocation, do you chase it? Do you buy pick and pay? Do you ignore it?
Now I'm angry. We got no allocation.
Oh, okay. So are you chasing or ignoring? Or buy?
But I think it's going to be a success simply because we haven't had anything of this magnitude or of this excitement. So I think there will be a flurry to actually pick up and increase your allocation. So I think it's going to be a success. Simply don't do the economics yet. Let the market decide, and then afterwards you can come back and say, did I overpay or not? But I think it's going to be a typical new listing with lots of interest and activity around it.
Rowan, I mean, we haven't seen anything like this in an age. I mean, I'm thinking back to Discam, I'm thinking back to Signia. Like, we haven't had many of these in the JSE. What's your take on Boxer and how you guys at Nitrogen looking to play it?
Yeah, so I think what you are seeing is particular interest in the retail sector, the South African retail stock space. We've seen a number of positive numbers, and I guess what's interesting is that's near-term performance. So post-October trading appears to be very robust. So I think that's piqued international investor interest. We're seeing quite strong flows, the likes of Pepkor, Foschini's doing incredibly well. And by all intents and purposes, Boxer is quite a unique asset, well positioned in that soft discounter space, maybe doesn't have a direct competitor. So it's a good way to play that trend and opportunity. As we've said, massive investor interest. And I think the share, there's going to be a rush to increase allocations or increase the sizing in portfolios. So it could push quite strongly. Pick and pay is not a bad way to actually play it because you're getting in pre-IPO in a sense. Mm-hmm. And to some extent, that pick and pay price will have to follow the Boxer price. It's a question of where you think Boxer is going to land and where it's going to end. So it's an interesting dynamic.
I think the worry is whether or not pick and pay detracts from the Boxer valuation, so you've got a negative value on pick and pay already if you do the calculation. So you don't want that to increase and take away from Boxer. So,
surely, David, at some point, pick and pay comes under pressure to unbundle or sell the rest of Boxer.
It will be their ATM. Yeah, it's going to be there. Every time they need a bit of money, they're going to put, as we've seen with the Anglo Group at the moment, you're seeing the same kind of strategy now, just putting shares on the market to raise cash.
Okay.
I understand what Roger's saying. Rowan, sorry, Roger's the brother. I would go straight Boxer. I'm not a discount.
Cerebras. I don't know if you know of them, David. Rowan, they're an AI company in the US. Reports of an IPO coming towards the end of the year. Either of you got any insight into it? No? No.
It's just, there's just so many new businesses. And the worst thing is success breeds a whole new breed of people looking for new kind of companies. I'm the kind of person, I like to know the company and I like to know its track record over 4 or 5 years before I go into it. You've got to learn management, you've got to learn a lot more. So I'm very nervous of new businesses, as we've seen with Supermicro and even Palantir and these kind of businesses. Just be careful.
Yeah, no, I take your point on that. So let's go to some updates that are coming through. Rowan, we saw an update from Nampak. This is the turnaround strategy. So far, seems to be working. Is there opportunity or value in Nampak at these levels?
Yeah, we've had quite a close look at it. The management team has done an excellent job. You've seen a few of these cases where it's sort of a self-help story where the new management team goes around about repairing the balance sheet, paying down the debt, selling off non-core assets, refocusing on the core business. And if we do, and we're expecting to see an upswing in consumer activity, if you look at fast-moving consumer goods, volumes have been quite constrained. Price increases have really what have held up the revenue line of these players. But as food inflation comes down, consumers have more money in their pocket. We could see volumes improve, which would be good for Nampak again, from a packaging point of view. So they probably are going into a better operating environment in a much better position. It did look quite full when we looked at it. A lot was priced in or discounted into the current stock price. So you'd have to do your homework, and I guess you have to take a view on earnings expectations and earnings going forward. But in a good operating environment, there's still value there.
David, Nampak?
They're down 10% today, or 9%.
Yeah.
You look at the numbers, you say, oh, these are good. Yeah. Finally something positive. And then the market gives it a 10% smack. You say, well, I don't understand. So Rowan gave a very good explanation, but there has been a turnaround. I mean, they've been replacing every screw in the operations and really trying to get it right. And they've recapitalized as well. So look, it's still, sadly, it's only about a $3.5 billion company now, having come down from its former days of, I don't know, in the 20s or 30s, wherever it was. Technically, it should be a good operation. It's packaging. Everything's put in a packet.
Yeah, everything gets put in a packet at some point. David, you talk about $3.5 billion. How about 350 million? I think there's the market cap. Actually, no, I'm probably doing Charles a disservice. Purple had results out yesterday. Question coming through: should I be buying Purple at $1.15 as we see more people buying shares on the market? How much time did you spend on those results yesterday?
Purple.
Yeah.
I like easy equities. I think they do a wonderful job. For the low end of the market, people who want to buy. In fact, not even at the low end of the market, but there is, yes, if we do get people coming back into the market and buying shares like Boxer and that, you are going to get an uplift in profits. So it's not one I follow that closely. I could really dispense any kind of value kind of opinion, but good luck to them. We're all in the same business. We all want more trade. We all want more profits, more brokerage, and so on. But yeah, there might be common sense in what they're saying.
Rowan, did you guys have a look at it? I mean, this is a small cap with an emphasis on the small part.
Look, I think they're doing a lot of good things, as David says. It is focused towards the retail investor. And I mean, David and both, I've been in this market for a long time, and maybe, I mean, with Boxer sort of in the excitement around an IPO, and the prospects for the South African economy a year out, improving sentiment, maybe we are moving into a bull market phase for South African equities. If that is the case, Purple is a good place to play increasing interest in equities by retail investors, and the volumes will improve. So if you're bullish on the markets, Purple's not a bad way to play it.
Yeah, I like that. Let's stay with you, Rowan. A question coming through about Southern Sun. There's been some talk that they'll benefit from two-pot, maybe even the changing visa regime. Of course, there's a couple of others in the space. Your take on Southern Sun?
Yeah, we quite like the hospitality sector. I think it's also been in a very tough space for a number of years. We've seen government curtail spending, but the recent numbers showed that they saw an uptick in occupancy September, October. So it does look like that consumer environment is improving, and it's a fairly simple business. They've just got to get their rooms occupied and push up their room rates. High operating leverage because of big fixed cost base, and if the occupancies do improve, the profits will certainly come through to the bottom line. They've done a great job of controlling their costs. So the share has run, though, very hard into that expectation. We have seen some big institutional investors taking up fairly big stakes. So we like the space. We think there's better value in some of the other counters that maybe haven't run as hard, and still have some catch up to do. You've got Sun International, for example. They do have gaming, which is evolving, but they have exposure to online betting as well through Sunbet. So that's an interesting proposition. So there are a few counters out there that are worth looking at.
David, Sun International, or are you heading down to your local City Lodge?
I like travel globally. I think that we're going to see big seasons developing in that. I think, what's interesting, Simon, I think that coming out of COVID, people have changed their habits. I don't think they're going for big ticket items anymore. They're much more expansive, and you're seeing so many people traveling now and looking for exotic or different areas to travel to, rather than the old way that we used to travel. So I think this is this is an area that you have to look at. And I like the hospitality side. I know that if you like gambling, as Sun International has as well, it's a different area. I just like the pure hospitality side of it, like even City Lodge as well, which I think is a bit pricey, and not completely in that area. It's more business travel.
Yeah.
And I think it's hard to transition towards holiday travel.
Yeah.
But I'm with Rowan. I think this is a big area that we have to watch globally. Even those big ships that come into harbour, in Cape Town and so on. It's a big area, and a nice, just a nice theme. Yeah.
Yeah, I was at a pub in Durban and one pulled into the harbour across the road, and hundreds, thousands of people get off this boat. I mean, I haven't seen anything like it. Quickly before break, David, what about motors? Mostly new cars, a little bit of old cars, but mostly new cars. You get excited about new cars? We're all buying second-hand these days?
I think we're buying second-hand, except that they're buying down there. I think new cars are becoming very expensive and very difficult. And that's why I was never a We Buy Cars fan. But the more I look into the industry globally as well, the more I realize where they're going. Maybe Motors has got their second-hand car dealers as well and doing well on that side of it. But I still think it's an area that's a little under pressure at the moment.
Rowan, Motors?
Yeah, so I mean, what you are seeing is quite a big evolution in the car space, and particularly the new car space. You're seeing these Chinese entrants priced below the incumbents, and starting to gain significant market share. So you've got to make sure that these car dealerships have the right brands in their portfolio. We have seen the likes of Kia and Hyundai actually losing share to the likes of Suzuki and Chery and some of the newer players. So, European car manufacturers under significant pressure. So I'd be a little bit cautious. Cars are very well built. They're lasting longer. So people are happy to buy secondhand cars. So we would prefer We Buy Cars. Look, it is reflecting that, I guess, in the price right now. But maybe the other dealership groups that are a little bit more interesting from a valuation perspective. I think you have to be bullish on new car sales, and we're not that bullish on new car sales.
Yeah,
I have to ask Simon whether he'd buy a second-hand Sherry, or what's the other one? The Chinese car. I don't know.
I'm not even sure I'd buy a new one. They look nice, but no, staying away for now. David, I'm going to start with you. I'm going to start with little Vukile. We saw some numbers out. They've got the local operation, which is really lekker, which is sort of like not the big sort of massive regional malls, townships, urban areas, so rural areas alike. And then, of course, Spain. Your take on Vukile?
Look, it's more than 60% Spain. I mean, sorry, more than 60% of it is now Spain. I think it's one of the better managed property companies on our market. I'm not a great property expert. It requires a lot of attention and a lot of understanding. But I can't help but be impressed with what Lawrence Rapp has done, with Vukile, and probably remains, the best choice on the market. A very decent return. Yes, they're pricey, and they're pricey for a reason. So, my vote is, go with them. 60% Spain, and I have to take you back to 10 years ago, during the financial crisis, in the 08 or 09, that's more than 10 years ago, when Spain was really in trouble and you could buy the whole of Spain for absolutely nothing. They had so many properties. big turnaround in where the country has gone, and particularly in the property market. But I'm a big supporter of Lawrence Wrap, yeah.
Hey, I forgot about that. The pigs. Portugal, Italy, Ireland, Greece, and Spain. Yeah. And now we've moved on from all of them. Rowan, Vukile, which is mostly Spain, and frankly, some nice assets locally as well.
Yeah, it has certainly been a quality counter. Management has done the right things. Very good allocators of capital. Got their timing right in terms of increasing the exposure to Spain. So it is quite a diversifier. We know a lot of the other counters give you exposure to East Europe.
Yeah.
This is an alternative to that sort of mainland Europe, which I think is, at least the property side, particularly Spain, is doing well. I think some of the other economies, ex-growth. So it is an exciting area that they've picked. And as you pointed out, the local portfolio, those smaller township sort of retail operations are doing well, actually. And I guess we mentioned Boxer earlier. That's the type of space that they would be looking for. So it looks like this, what they call the Kazi economy, this sort of informal economy, is actually growing quite well, is quite strong, is well funded with grants, and is a growth area of our economy. So they actually are very well positioned for that.
So does that mean, because the other question was coming through, Hyprop had an update, and the question was, is it worth looking at? Hyprop, of course, is Eastern Europe, and then it's the proper malls. It's Hyde Park and the fancy malls in South Africa. Rowan, staying with you, Hyprop, very different to Vukile, although still retail. Hyprop an option?
Yeah, so I mean, we've been speaking about the excitement in the retail space, and if the retailers are doing well, the clothing retailers, the food retailers, general merchandise, and seeing an uptick in turnover, some of those turnover clauses will kick in. There'll be an increased demand for space. I think what was particularly pleasing in that Hyprop update was positive rental revisions, which you haven't seen for some time. So that means they're renewing at higher rates than the past, which implies increased demand for space. And I guess they've got, as you point out, these trophy and signature properties that retailers need to and want to be in. So it actually bodes quite well for trading, the trading environment for Hyprop.
David, Hyprop, I'm not sure. I mean, they've got sort of like the old school malls and the fancy areas.
Yeah, I'm not as keen. I just think that there are more issues in South Africa, particularly in those super large, other than if you're at the waterfront or in very specific areas. I would probably look, that's why with Vukile, at the smaller standardized kind of shopping centers. I'm just a bit cautious that we might have run ahead of ourselves on the retail side, and running these big retail malls is not that easy. And then you've got places like Pick n Pay and most of the major retailers actually shrinking their size, as you get more online purchases and so on. They don't want the same kind of space. So I'm not as ultra bullish as Rowan on that side. I just, let's go Vukile, that's enough.
Then staying with ultra bullish, what about Capitec? Question coming through. Capitec, I've made a bootload of money, according to the person. Should I take the profits and run? I don't know. I mean, Capitec's expensive. It's been expensive since forever and a day. David, what would you do if you were sitting in a bootload of profits?
Yeah, I like the operation. It's one of those companies that everybody tells you, don't buy it, too expensive, and all it does is get more expensive. And I think they're one of the most, when I say impressive banks, they're not aggressive, but they're innovational. And I think they've got a captured market. Their customers love them, and I think that's such an important element. I looked at First Rand's results yesterday, and they're okay, they're fine, but there's no excitement around them. And I think Capitec, even though it's trading at this ridiculously high level, I still think is going to continue along that trajectory. I think very innovative off a low base, but I like management. I like where they're placed.
Yeah, and 20+ million accounts. I mean, it's completely crazy. Rowan, Capitec, would you take the money and run or hold on?
No, I mean, I agree with David. I think what you got to look at for these growth stocks, and we hear the growth stocks in the JSE are few and far between. So this is probably the growth stock. Is really, does the growth justify the multiple? And if you feel that it does, there's no reason to sell it. And where there's high growth, you could have a PEG ratio of up to 2 times. We've seen clicks with very high PE ratios, but it's sustained it and continued to deliver, and Capitec as well. So I think in this case, the earnings trajectory is so strong. They keep expanding their proposition, business banking, the funeral that they've brought in-house, the MVNO, the mobile data. So they are just mining that base and adding value and increasing customer engagement. It's really a phenomenal business and a machine, and I think it deserves the rating that it's got. So yeah, you're a happy holder with your bucket load or bootload of money.
No, you are a very happy holder. Rowan, let's stay with you. Let's take Hudaco. Question coming through. The retailers have all run hard. Should we start looking at other parts of the South African economy, Hudaco being one of them?
Yes, absolutely. Hudaco is one of the stalwarts of South African industrial landscape, very much providing consumables to the broad economy, the engineering space, and to some extent in the consumer space. And it's been a very reliable performer, typically strong management team, strong balance sheet, and delivered earnings growth. They had a bit of a hiccup recently, but I guess we've seen that from a few counters where it's been very tough trading environment. And I think you've got to look forward. The retailers have run very hard. I think you've got to look at other companies that will benefit from improving economic conditions. I think Hudaco certainly is one of those. It's a quality counter, so deserves a reasonable rating. So it's worth a close look at.
David, Hudaco, I mean, very old school, but it in the right space. And again, we've got really good management in some of these companies. I'm thinking Omnia as well. I'm thinking Roynet, Invicta with Stephen Joffe.
If you drop their product on your toe, it hurts. And those are good companies. So, but have a look at the chart. It's something that always gives you an indication of what people think of the business. And it goes from bottom left, top right, and it's in new high territory. I've always liked this operation. And I think that things are bound to start turning around here as well. We have to. Yeah. It's an imperative to get growth back here by spending on proper things, on expanding the economy, on infrastructure and that. So I like the business. And I agree with Rowan. I think this is a stalwart. Hubert Davies, Hudaco.
Okay, that goes way back into
Marion Roberts as being a great company as well. One of the stalwarts of the South African industrial scene.
Once upon a time. Quickly before we go to stock picks, David, I want to get your take. Question coming through about Tharisa, PGMs. They also got a plant they're doing in Zim. Of course, they've got chrome. You excited about PGM miners and Tharisa?
I'm waiting for the bottom. You just keep waiting and waiting. I don't know. You know what I'm trying to say? I think that once we're at the bottom, that's all I can say. And which means the downside's less than the upside. You don't have to worry. But I still think there's a long way to go before we start to see demand coming through in the price and getting these companies going. I know that Rowan's going to talk about Anglo Plats, but and I'll leave him to give you a more better view of the whole industry.
So let's go to that. Let's get some stock picks, Rowan. I'm not going to ask you about Tharisa because your pick is Anglo Platinum. News today that Anglo American had sold another 6.6% at 548 Rand. And this is your pick for today.
Yeah, so what we have seen is the market had broadly expected that Anglo American wouldn't make that second placement, which they completed last night. Actually, fairly strong demand. It looks like a lot of foreign demand. And if we look at Anglo Plats on a relative basis, certainly has lagged the rest of the PGM miners, which, interestingly enough, from their perspective, the share prices have sort of predicted the bottom in that they are forecasting really in the share prices higher PGM basket prices than we currently seeing at spot. So indicating that supply will be curtailed, prices will firm up, and the earnings will improve. And I guess if you do see that and expect that, then Anglo Plats is probably the best quality, cheapest way at this point to play that cycle. Implats, Sibanye, Northams have run quite hard, and Amplats is lagged. As I said, the placement's gone through now, so that big overhang has largely gone away. The free float will improve, and so we expect continued buying as the overhang from the placement is mopped up, and the share will continue to firm in the weeks to come.
Yeah, and certainly there was very strong demand,
I'm
as you
also
say.
going to get ChatGPT. I'm going to have all these things in front of me. Well done.
David, your pick is...
Just on Rowan's point, without taking up too much time, I think if you look at the fair value of Anglo Plat, it's far above where the trade is at the moment.
Yeah.
And I think that's where the dilemma is. Why is there a gap and when is it going to close?
Yeah. No, I take your point on that. But David, you're going with Eli Lilly.
Simply, I was absolutely staggered to find that 42% of the population in the United States is classified as obese. I thought maybe 42% of adults, but no, population. And last night, the Biden administration have now allowed coverage of the obesity drugs. That's coming from Eli Lilly and from Novo Nordisk. So Zepbound, which comes out of Eli Lilly, so that you will be covered in Medicare and Medicaid, and that's a big breakthrough now for the drug. So I think this is going to go on for some time. The demand for this product, and the big issue, Simon, has always been price.
Yeah.
But if it's covered by your medical aid, it makes it all the difference. Yeah.
Well, now the government has to pay for it, and they've got to fund the money. But hey, tariffs, that'll solve that problem. That's all for tonight's Stockwatch. Thanks to our guest, David Shapiro from Sasfin Securities, going with Eli Lilly. Rowan Williams from Nitrogen Fund Managers, he's going with Anglo Platinum. Up next, the close. Stay tuned.